Hello and welcome to Kitco Mining's Digging Deep with me, Paul Harris, in which we discuss some of the most interesting stories in the mining and exploration space. Joining me here in person at the 2025 Precious Metal Summit in Beaver Creek, Colorado, is none other than David Erfle, Junior Miner Junkie. David, welcome back to Kitco.
Thanks a lot for having me on again, Paul.
High energy issue today because we're at the Precious Metal Summit. Gold prices at $3,600 per ounce. Silver's over $40 an ounce. There's money flowing around. There's smiles. A lot of energy. What are some of your sort of initial takeaways from the event?
Yeah, it's really. I mean, gold futures hit 3,700. And silver now is back over 42 in the futures market as we're speaking right now. It's really nice to see a lot of those frowns from the last couple of years turned upside down. Everybody's very optimistic, very happy to be cashed up. The money's flowing. Most everybody's share price is doing well. A lot of 52-week highs, a lot of all-time highs in juniors, and the switch is definitely flipped on in the junior sector after some really lean years.
Higher gold price or Botox?
Higher gold price or what?
Botox on those frowns. So I'm just messing with you. Okay, we've got a lot of news to get through. Some big stuff this week. Anglo American and Teck Resources announced they're going to merge in a $53 billion merger to create a copper giant that will be called Anglo Teck, and it will be based in Canada. It will have more than 70% exposure to copper. Expected synergies between the Collahuasi and Quebrada Blanca mines in Chile are expected to increase generate 175,000 tons per year of additional copper production. It will have a primary listing on the LSE with subsidiary listings on the Johannesburg Stock Exchange, Toronto Stock Exchange, and New York Stock Exchange. A special dividend or bribe to Anglo American shareholders of $4.19 per share. Anglo will end up owning 62% with Teck at 37% of the eventual company. David, each company weakened itself by divesting their coal operations in the not-too-distant past, and each has received the attentions of a bigger suitor, again, in the not-too-distant past. Teck recently also said it will stop all development, funding and financing until Quebrada Blanca is working properly. Is this really a mutual defense pact?
Yeah, it is really interesting. Yeah, I mean, yet both share prices went up on the deal, on the proposed deal as well. Yeah, it's going to be really interesting how this plays out. It's going to take 12 to 18 months, they said, for it to finalize. So within that time, I think it's going to be kind of the gift that keeps on giving to the sector, because it's really positive for the sector. And there's going to be other offers. Rio could make an offer. Freeport could make an offer. It's really positive for the sector.
Well, BHP has made overtures in the recent past to Anglo American, and of course, in the last year or two, Glencore tried to make a move on Teck, faced fierce resistance from Canada. So it seems quite sensible that they're going to headquarter this company, Anglo Teck, in Canada, try and avoid some of that possible resistance there. Glencore wanted the copper. There's a $300 million break fee, I think I'm correct in saying. Do you expect Glencore to make a bid to disrupt this happy party?
Oh, yeah. I mean, I would not be surprised to see that happen. I mean, like I said, 12 to 18 months, who knows where the copper price is going to be within that time. I mean, the copper price could easily get back above $5 a pound, and if it does, then the deal looks like it's suspect, and another bidder will come in.
With a $53 billion sort of headline number, this story has been covered by pretty much not just the specialty mining investment publications, but it's also made headline news in a lot of normal mainstream media. So presumably that's throwing a lot more light on the copper sector, and there's going to be a lot of non-mining people out there saying, what's the big deal with copper?
Right. I mean, yeah. It's because, especially since it looks like the U.S. is going into recession. So, I mean, that's usually, when you see signs of a recession, then you see the copper price going down. But, as far as with everything positive going with the copper price in AI and all these other applications, it's really interesting to see the copper price leveling off here after the big tariff scare when Trump came out and said it's just going to be copper products, not copper itself. And the copper price took a big tumble, and it's starting to even out now, around $4.50 a pound, it looks like. So it's going to be interesting how it all plays out. But like I said, this is very positive for the sector.
Let's talk a little bit more about the Canada aspect to this, because as I mentioned, Glencore got a lot of resistance. There was a lot of headlines in Canada about the slaying of Canada's last major mining house if Glencore had have succeeded in taking them over. Anglo American intends to headquarter the company in Canada, and this is perhaps particularly resonant because this week there's also been other announcements such as Newmont delisting, announcing it would voluntarily de-risk from the Toronto Stock Exchange. Its reason? Low trading volumes. Last night, Barrick Mining announced it's going to sell its Hemlo mine in Ontario for about just over $1 billion to Carcetti Capital, which will create another single asset mid-tier company. Hopefully that's a theme we'll get back to a little bit further later on in our conversation. I guess one question here you could ask is, why don't big miners want to be in Canada?
Well, the Investment Canada Act, in 2022, they announced that they're making it more difficult for foreign capital to come, especially Chinese capital. SolGold, they delisted also from Toronto, and remember, Barrick even mentioned their intent to possibly redomicile out of Canada. So it's interesting, and it also a lot of juniors now, like SolGold, they're redomiciling out of Canada because of this Investment Canada Act. So it's going to be interesting to see how it plays out. I'm sure you're going to see a lot more juniors going out to redomicile, but it can be expensive because to redomicile, you have to pay an exit tax, and that exit tax, the tax is based on your market cap. So I've spoken with several juniors, and one that is in the process of redomiciling. They said they didn't want to really market the company right now, and they really didn't want to have any analyst coverage because they wanted to kind of lay low while they work out the redomicile, because they don't want to pay a lot of exit tax. So once that deal is finalized, then the exit tax is the number is finalized. Then they can market, and then they can go out and tell their story.
That's an interesting take, running down your market cap to pay lower exit tax.
Yeah, exactly.
One of the other interviews I have here is with SolGold CEO, so this is certainly going to be one of the factors we're talking about there. One company, one M&A transaction that is very firmly in Canada is Newfound Gold, who announced it will acquire Maritime Resources, which follows an underwhelming PEA on its Queensway project, which, despite the many high-grade intercepts the company has published over the years for more than 600,000 meters of drilling, had a production concept of 77,000 ounces per year. Newfound Gold once had a $1.2 billion market capitalization, Canadian, at a time when most juniors, including Maritime, could only dream of having a tenth of that market capitalization. Maritime shareholders will finish this deal with about 40% of the resulting company, so it certainly seems to be a merger of disequals there. Kudos to Maritime for really sort of trading up and leveraging their stock into that. David, it seems there's perhaps some humble pie there for Newfound Gold. Maritime definitely seems to be the winner in this deal. Prior to this, the only thing Newfound Gold has mined successfully was Eric Sprott, who's invested hundreds of millions of dollars into the company. No disrespect to Maritime Resources at all, but how has it come to this for Newfound Gold?
Yeah, really, really interesting here. I mean, they're obviously trying to tie up that whole district. I mean, before this deal, they purchased the Kingsway project from Labrador Gold, and fortunately for myself and my shareholders, several years ago, we piggybacked on Newfound's gold success that they skyrocketed to that 1.2 billion market cap in an area play and getting into Labrador. Fortunately, we got out when we did really well with it, and then of course once Newfound Gold made that took over that property, it was sold for a lot less than the market cap had gotten up to in Labrador Gold as well. I wouldn't be surprised if Newfound Gold might be talking to Firefly sometime in the future, but as far as a merger as well. But now I think Firefly's market cap is much higher than Newfound Gold's. I think it's around 800 million, and But that appears to be what they're trying to do, is tie up an entire district.
Okay, let's leverage this onto another thing that we've been talking about at the event here. Maritime spent a long time as a penny stock at, it's 5 cents per share before it did a 10-to-1 rollback a few months ago. Is this the power of share consolidation that we're seeing?
Absolutely, and I neglected to mention before that, as you recall, Anaconda Mining, they attempted to make a hostile bid for Maritime. I think it was in 2022, I think it was, something like that. And that never came to pass. And now, of course, Anaconda morphed into Signal, and now that Goldboro project is part of the next gold stable. And they recently got the IA permit, and they're very close to getting that project shovel ready. But I digress from your question here, and which was we're talking
the power of share consolidation in this market.
Yes, it's interesting because recently we've been seeing some share consolidation announcements that were made, and they weren't made in at the time of a major news event, a new positive news event happening with the company. Because normally it's a very negative. It's a negative bit of news when a company comes out and says that they're gonna roll back their shares. So what they want to do is they want to wait for a very positive moment in the country for the company to announce that. But recently we had Erdene Development in their project in Mongolia. They announced a share rollback, and their share price popped like 10-15%. And also America's Gold and Silver, they announced a rollback, and their share price popped. I mean, even a smaller silver company, Apollo Silver, they announced a rollback, and their share price popped. And they didn't announce any, that I know of, any major news events for the company, positive news events in conjunction with that share rollback. So I've talked to several companies with bloated share structures, and I've asked them if they were considering a share rollback, and in just about every instance they said yes. So I think you're going to see a lot more of these rollbacks because the market looks at them as positive right now, because there's capital coming into the sector. And if you roll back, let's say you roll back for the purpose of getting a U.S. big board listing, right? That's a very positive event, and it's going to get a lot more interest from U.S. investors in your stock, because if you have a U.S. big board listing, now you can have generalist funds get into your stock. And there's a lot of these investors, they have retirement accounts, and their retirement accounts don't let them invest in OTC listed stocks. And also, if you're a retail investor and you're just starting to get interested in this super hot sector, then you've got a Robinhood account, you cannot invest in an over-the-counter a listed stock. You can only invest in big board stocks. So they're starting to see the advantages of this. And in order to do that, some of them are going to have to roll back their stock first.
I think that's an interesting aspect there of how market sentiment changes, and what yesterday was bad news, today is seen as good news. And of course, you've got the other elements you mentioned there, that a lot of funds can't invest in penny stocks. But once you've got a dollar sign in front of your share price, it opens the door to institutional investors.
Absolutely.
Yeah. Another big transaction announced, and that's Elemental Altus Royalty. That's getting together with EMX Royalty in an all-stock transaction valued at about $450 million. That includes a 9.8% premium, and that will create a mid-tier royalty and streaming company to be renamed Elemental Royalty. That will have a pro forma market capitalization of about 1 billion Canadian dollars, and it will have 16 producing royalties. To support the deal, Elemental's recent investor, stablecoin giant Tether Investments, is to purchase $100 million of Elemental stock. A lot of things to talk about with this one, David. Consolidation in the royalty space, let's start there. Do high prices for gold and silver and copper mean deal flow is getting tougher for the royalty and streaming companies, such that they have to buy each other because they can't buy stuff?
Right, absolutely. The big one was the Royal Gold Sandstorm deal, and I wouldn't be surprised to see Metalla be the next one to merge with a larger royalty company. Yeah, it's interesting to see that the consolidation in the royalty space is really picking up for the reasons you just mentioned.
I think when you look at sort of deal flow or deal creation, it does seem that the more creative companies are not, they're funding transactions to create a royalty or stream on that transaction rather than going to perhaps existing things and buying the royalty. And an example of that will be the Hemlo deal we talked about a moment ago. Wheaton Precious Metals is providing $400 million of funding towards that $1 billion acquisition, and that will give them a stream on the production there, in which they'll pay, I think, 20% of spot price. Without that royalty, that stream financing for Wheaton, that deal might not happen.
Right, absolutely. And I think only like 20% of it is shares of the new company.
Yeah, that's quite amazing. Now, David, Tether buying into Elemental is perhaps one of the most interesting stories of 2025. Tether has all the money in the world, of course, and it has ordained Elemental as its initial venture into the mining space. With this $100 million capital investment into Elemental, that seems to suggest that more transactions will follow.
I believe so, yes. I mean, Tether is behind the USD stablecoin, and they're looking to stabilize that with some solid assets. I mean, it's, they've got $8.7 billion of gold in Switzerland, and they're also backing it with U.S. treasuries. So it's interesting to see now that these crypto companies are basically, their actions are suggesting that, hey, gold is the real safe haven, and we want to get exposure to that. I think, I think the CEO of Tether even labeled gold the natural Bitcoin.
Marketing, eh? Okay, we're at the Precious Metals Summit. I don't know if you've seen this or picked up on this, but the place is crawling with corporate development teams from the bigger mining companies. And we're not just talking one or two people here. We're talking about teams of 4, 5, 6 people. So they're really kicking the tires hard, looking at potential acquisition opportunities, one would assume. We've also talked about the development or the creation of more and new single asset mid-tier companies, with companies being formed to buy specific assets out of Barrick, out of Newmont. The mid-tier has grown fatter, but a lot of those companies just have one asset, so they have that single asset vulnerability, zero pipeline, so presumably they also want to start creating a pipeline. How do you think that will play out in terms of M&A going forward, and particularly for some of the junior explorers and developers with advanced stage assets?
Yeah, it's interesting in that respect. I mean, the mid-tier field just keeps growing and growing, and what I've really noticed here, Paul, at this show is several of the companies that I've talked to, and I've heard other rumors that these companies that don't have any cash flow, they're either late stage exploration companies or they're late stage developers. They like to have some cash flow to pay for their operations while they're de-risking these projects. And they've watched several companies like Integra, Discovery, and Heliostar go out and purchase operating gold mines for production for cash flow to cover their costs while they de-risk other projects, and they watch their share price just explode after they've done so. So I think you're going to see more of these companies go out and buy a gold mine, a silver mine from a single asset producer, or try to merge with them to try to get some cash flow.
The logic makes a lot of sense, David, but what is there to buy? Who is there to buy? And I imagine the competition for them is increasing. As you say, everybody wants it, so the price will go up. Being very, very cynical about this is perhaps the window of opportunity for multi-asset producers to offload their rubbish.
Absolutely, yeah. I mean, it's funny you say rubbish. When we saw Discovery Silver, fortunately a holding of mine and my subscribers before the Porcupine deal was made, them calling it rubbish, but this is a fantastic asset with multi-million ounces, and Discovery got it for $25 an ounce in the ground. I mean, they stole it, and what they call one company's trash is another company's treasure, basically. So, yeah, but in these deals that I mentioned before, like the Discovery and the Integra is also another holding of mine and my subscribers, and Heliostar. Those deals were made before the sector exploded and the gold price really exploded higher. I mean, the gold price was rising when they were making, but now the juniors are catching up to the exploding mining prices and the exploding gold price. So these projects now aren't nearly as cheap. These companies or these mining these mines that they're considering to maybe make a run at, they're not nearly as cheap anymore. So it's really going to be interesting to see how some of these try to pull it off. I think there's going to be more. There's going to be a lot more M&A in the sector based on that premise.
Well, a lot more business for the likes of Wheaton Precious Metals, Franco-Nevada, and the like to finance this. Yeah,
exactly.
Okay, let's wrap up by. Let me ask you this: what have you learned this week that you didn't know at the start of the week?
Oh, wow. Well, I learned that there's a lot less undervalued companies out there than I expected to find. I mean, I expected to uncover at least 5 or 6 or 7 opportunities that were still under the radar that had yet to be discovered by the market. But as the mining sector, as the GDX and GDXJ continue to fly through major resistance levels, and the juniors continue to catch up even more so, I see a lot less undervalued opportunities out there than I expected to see.
That must be quite a challenge for you in some ways, because in your portfolio, a lot of those companies are getting bought, so you need to replace them, and you're obviously looking for good opportunities for yourself and also for your subscribers.
Exactly, yeah. I mean, several of the companies that I hold in my portfolio and that I recommend to subscribers, they've quadrupled, tripled, doubled. I mean, it's been really incredible. It's interesting to see that there's still a lot of interest in the sector, but you don't want to preach that, hey, this stock, you should be chasing it because it's going to get taken over. But you don't want to promote FOMO. So what I try to do is, my mantra is, I will not get into anything unless I see 3 times upside potential. There was plenty of companies like that last year at this conference. I mean, you couldn't sling a dead cat without hitting a stock of a company that had at least 3 times upside potential. And fortunately for me and my subscribers, we were able to accumulate, before this move happened. And that's why we're doing so well right now. But it's difficult to find those multi-baggers right now because most of them have moved up so much. Sure, they're still there, and we've still got a long way to go in this sector. I mean, if you take a look at the GDXJ, it's still 35% below its all-time high, while the GDX has risen above its all-time high. And if you look at the TSX Venture, it's still over 70% below its all-time high, reached in 2007 when gold was trying to break out above $1,000 an ounce. So we've got a long way to go in this bull market.
Okay. David, I've never asked you to do this, but I'm going to ask you to make a prediction. Okay.
I don't like predictions, but okay.
I'm going to ask you to make a prediction. When we're here next year, are we going to see people moaning that they've only made 50 to 75% gains on stocks?
Well, it's difficult to make a prediction from a year out, but I think we're still going to see a lot of smiling faces. But we are due for a correction here, but it's going to be interesting to see how that correction shakes out. I know there's still a lot of money on the sidelines waiting to get in at the same time of it being technically extreme overbought, but I don't think the weakness is going to last very long. I think those long-term resistance lines that the GDX and GDX just crashed through, I think they'll probably become strong support very soon.
Okay, this has been wonderful. David Erfle, thank you very much for joining us today.
Great. Thanks again for having me on, Paul. Always a pleasure.
And that's all for Digging Deep this week. Stay tuned. Hit that subscribe button. We have more to come from the 2025 Precious Metal Summit here in Beaver Creek. But until then, I'm Paul Harris, and this is Kitco Mining.